Hi, I'm John Mark Young. Now, today's question comes from Lucas in Huntington, West Virginia. And Lucas asks, John Mark, we just passed the tax deadline this week, and I'm not happy with the amount of income taxes that I'm being forced to pay. My CPA did our tax return, and we owe a lot of money. Can you suggest on your weekly video some ways that we can pursue that will help lower our tax liability? Well, Lucas, lowering taxes, there's a lot there. It can take on many forms, and it involves taking advantage of various tax deductions. There's tax credits, and then there's strategies you can use to try to lower your taxable income or directly reduce your tax liability. But here's some common methods that we often talk to clients about, and maybe some you've heard before. The first being, you should contribute to your retirement accounts as a pre-tax contribution if you're looking to lower your taxes. Contributions to retirement accounts like a 401k or an IRA can be made on a pre-tax basis, and when you do it that way, it reduces your taxable income. Contributions to a Roth IRA don't provide any sort of immediate tax break, but the earnings and the withdrawals are tax-free at retirement. So if you need the tax break today, for whatever reason, like you're talking about, you should contribute to the traditional or the pre-tax side of your retirement plan. This could be because you're having an unusually large year of income, just something happened that catapulted you up, is why you might consider doing a pre-tax contribution, even if you're younger, maybe just for a year because you're wanting to lower your tax liability just for that year. And then maybe you go back to the Roth. It's not an all or a nothing. You can do a 50-50. You could say this year, because again, an unusually large amount of taxes, I'm going to go pre-tax to lower my tax liability. And then next year, I'm going to go back to a Roth IRA. It's all totally flexible based on what you need. But that is one easy way to lower your tax liability, is just make your retirement contribution. Of course, we say that's number one because we are a retirement planner and financial planner. But making your retirement contribution pre-tax will directly lower your tax liability. Now, how about option number two, Lucas? That would be getting back to itemized deductions as opposed to the standard deduction. When President Trump redid taxes, the standard deduction became the norm for most people. But if your itemized deductions exceed the standard deduction, itemizing will lower your tax bill. Now, here's some common ways that you itemize your taxes. Mortgage interest is a very popular one. Although, of course, you want to get to baby step 6 where you don't have that mortgage interest. Paying no interest is better than writing off interest. How about your SALT deduction, state and local taxes, up to the limit allowed? Charitable contributions, which could mean that you bunch multiple years of charitable contributions into 1 year, especially if you just inherited money. That's a great idea, using something like a donor advised fund. And how about medical expenses that exceed a certain percentage of your income? All those ways are ways that you could possibly itemize your taxes. How about option number 3? This is a big one, using a health savings account or an HSA. Now, you're going to have medical expenses over your lifetime. Either you're going to have them now, you're going to have them when you have kids, or you're going to have them when you retire. If you have an HSA, and you have access to an HSA, you should fund an HSA. Now, how do I know if I have access to a HSA? Well, if you have a high deductible health plan, then you can contribute to an HSA, and it's a wonderful way to reduce taxable income. Contributions are made pre-tax, and withdrawals for qualified medical expenses are tax-free. All the while, many plans will now allow you to invest these dollars, so they're actually growing tax-free. That, my friend, is what we call triple tax savings. How about option number 4? Educational expenses. This is very niche, but it might pertain. Claiming deductions or credits for educational expenses can lower your taxes. There's things like the American Opportunity Credit and the Lifetime Learning Credit, and those are 2 examples of ways that you can reduce your tax bill if you or your spouse or your dependents are in college or are pursuing any sort of further education. How about option number 5? Maybe you need to make some home improvements. Well, make energy efficient home improvements. Certain home improvements that increase energy efficiency will qualify for tax credits, and these credits can directly reduce the amount of tax that you're going to owe. How about one that you can do with your investment advisor, which is harvest some tax losses? When you sell investments at a loss, that can offset gains you realize throughout the year, and that's known as tax loss harvesting. Or you can just take the loss and not harvest gains, and that can reduce your taxable income up to $3,000 of ordinary income per year. The market just had a bad couple weeks. This might be a good time to do that. How about option number 7? Claiming dependent and family credits. Credits like the child tax credit and the earned income tax credit can reduce your tax bill significantly if you qualify, but it's going to be based on the family size and your income. And then option 8 is if you're getting a large tax bill, maybe you should adjust your withholdings. If you typically get a refund or a big bill, adjusting your holdings can better match your actual tax liability. And this way you'll have the money available throughout the year if you're getting it back in a refund, or you will not owe a large amount at the end of the year. Talk to our CPA, Cage Rush, about how to get your tax withholdings right. Finally, option number 9 is investing in real estate. Many real estate investments allow you to take certain tax advantages that will help create tax favorable income, or even in certain circumstances, losses that can be applied against your income. This can be done by going out and purchasing a property as an investment, or if you qualify, you can make an investment through one of our real estate partners, and they will do the investment passively for you, so you don't have to go out and find property and manage it yourself. But lastly, you should always consult a tax professional. Tax laws are complex and they change all the time. And they're getting ready to change at the end of 2025. So consulting a tax professional can help you navigate the intricacies of tax planning and ensure that you're using all the deductions and credits available to you. We recommend our tax ELP, recommended by Dave Ramsey as well, Cage Rush, who will help you ensure that you're using these strategies effectively and make sure you're planning, and in many cases, ensuring you're in compliance with tax laws and regulations, and should be said, making it easy for you. Who wants to sit in front of TurboTax for 4 to 5 hours and crank this stuff out? Now, maybe some of you can sit in front of TurboTax in an hour and get it done. But for a lot of people, it becomes really time consuming. Your time is probably better spent in other ways. Maybe go look at our video last week where we talked about the gig economy and creating freelance work to create more income. That's an option you can free up with your tax time by using a tax professional like Mr. Cage Rush. So thanks so much for watching the Question of the Week video this week. If you have a question you would like to have answered, hit it in the comment section or email your financial advisor, and we will try to answer that question on our next video. As well as if you would like to meet with any of our financial coaches or planners. Our coaches help you in baby steps 1, 2, and 3, get out of debt, stay out of debt, live debt free. And our planners help you in baby steps 4, 5, and 6, save for retirement, save for college, and build out a plan to pay off your house. Then you can go to that comment section, hit that link, and it'll push you right there. And as always, if you like this video or appreciated it, would you do us a favor? Hit the like button and the subscribe button. The like button pushes our content out to more people on YouTube, Google, and Rumble's algorithms. And the subscribe button allows our content to be pushed out to you as soon as it's available. Thanks so much. We'll look forward to seeing you next week.